Good morning, everyone. This is Midday Bell, where we deliver actionable insights, expert interviews, and real-time market updates to help you and myself invest smarter. I'm your host, Rebecca Kerswell, and today on Midday Bell, we are joined by Geoff Bysshe, our co-founder and president of MarketGauge.com. With over 25 years of trading, Geoff has done it all, from trading on the floor of Finex to managing hedge fund strategies at Millennium Partners, to now mentoring traders and building tools at MarketGauge. He brings a wealth of insight to markets and trading systems that investors at every level can learn from. I'm so excited to talk to you today and get to know more about you. Thanks for having me today.
Thanks for having me, Rebecca. We picked quite the day and the week to do this, actually. Interesting stuff going on.
Yeah, I would love to get a little brief intro from yourself about who you are, and then just to hear about what you're focusing on the market, what's catching your attention.
Okay, well, you did a pretty good job with your summary there. My quick summary is I started as a floor trader with Keith and Michelle, who also founded MarketGauge. I think Mish has been on the show before, and we've been working together for 30 years. So actually 35, wow, which is a little unusual. And during that time, I started on the floor, and then Keith and I went on and managed money for Millennium Partners, which was the hedge fund I think you mentioned. And since '97, we've been helping professionals and individual retail traders learn how to trade better, and also use our algorithmic systems if you just want it done for you. And we have pros who use our systems as well. So we're all about the markets.
Yeah.
So
amazing. So now, what are you watching in the market right now?
So I said that this week was interesting, and today interesting because as we'll probably get into it, we've got the Mag 7, the tech stocks got hit pretty hard yesterday, basically from the highs. You're getting hit again today. The interesting thing, though, is if you look at the equal weight S&P 500, it was actually up yesterday. It's holding up today. And if we want to dive into some of the industry groups, there's a lot of rotation going on.
Okay, yeah, definitely. I'd love to just kind of see what you're focused on. I know, the tech thing has been such a fascinating story because it's been rallying so hard, and I think it's been such an expectation that that might reverse, and it'd be scary to kind of jump into those Mag 7s or the S&P at this point. I don't know what your thoughts are on that, but.
Oh, I've got a simple thought actually on that. If I could show my screen.
Yeah, let's do it.
And I think it would help kind of guide the whole conversation if we let it, which is, one of the unique things about MarketGauge is that we have a few of our own indicators. One of them that's unique to us, but we've shown a lot of people this, so some of the listeners may have heard of it. We look at what we call calendar ranges, and there's a big one in July and there's a big one in January. Like January makes a lot of sense. Everybody's starting a new year, and everybody talks about the January range. We look at it differently. We look at it as about the first couple weeks of the month, and then we do the same thing in July. Okay. So that's what's really different. And what's really powerful about it is on my chart here, you can see the blue line is the high of the July range. Now, that may not be the high of July. It's only the first 10 trading days. And the magenta line is the low of the July range. So the reason that this is so powerful is that if you think about what just happened, we're still going through an earnings season. And you get into July, it's the second half of the year, especially when you've had a big run up. Analysts, investors start thinking about, is the year really going to end this well? Am I a little over optimistic? Or if bad news comes, now they want to take their profits. It works in both directions. This year, we've had a nice up year. So the simple rule here is that if you're above your July high, you're strong. If you break below the July high, warning. If you break below the July low and you've been above the July high, this is like in January. If the January gets off to a great start, market goes up, everybody's happy, it's up in February, and then in March or April, sometimes it goes down. Everybody panics because they all thought the year was going to be great. Now it's turning into a loss, and the emotional swing there, all you have to do is look at these lines. And last part of this short course here is here we are in the S&P today. And if you look at what happened in 2024, last year, hold on.
Wow.
It's a perfect recipe or like template for what could happen this year. Sorry.
This year in July, basically?
So here's last year in July. And
Yeah.
last year we had a good year. Now we didn't go above the July range, but once we got underneath it, it fell apart. And then it struggled until it got above the July high again, and then it rallied. So the markets never do exactly the same thing, but this whole concept of these two lines kind of guiding you,
Right.
it enables you to have an objective opinion. And so SPYs were still above it.
Yeah.
We were talking about the Mag 7. So here's the ETF on Mag 7. We're still above it.
Yeah.
If we talk about SMH, which is the semiconductors, we're below it. So that's like heads up on the semis. And if they get down below the 50-day moving average, which is the blue line, another heads up. So it's a really simple way to, and we, like I said, we do it for January, we do it for July. And right now, when I do the mentoring, we're looking for stocks and ETFs that are above that level to be long, below that level to be out.
And it's timed with the earning season or earning periods. Is that what you're saying too?
Well, the earnings season happens to fall at at the beginning of this whole, when this range gets built.
Yeah.
But it's basically, if you think of the market having two halves, the year has two halves. We're just looking at the second half and saying, is the second half in an uptrend or is it in a downtrend, and how do you measure it just with these two lines? Now, there's plenty of nuances on trading a line and whether you're bullish or bearish below it. But if you just start with, am I above it or am I below it? You'll be on the right side of the market all the time.
So right now, looking at this, are you short then of the stock?
Well, this is SMH, and this has been a leader. So I'm not gonna short the SMH just because it came back into the range. But if it were to break below the range, then yes. And if for example, let's look at a stock that's in SMH that had bad earnings, and this is ARM. So it gapped down on earnings. It hung around your July low, and now it's heading lower. This thing is, toast. Like this is an example of what to be short, especially since the rest of its sector in SMH is strong. The one that I want to be long is Broadcom. Broadcom's been above it. This looks much stronger than SMH. And so this would be an opportunity to be a buyer against the support of this level with a tight stop.
Yeah. Are you like, how long are you really are you trading, or are you kind of holding for a longer period of time? Is this?
So I do both. My primary objective in my own trading is because every morning I'm sitting in front of the machine and mentoring. I can look at the markets every morning, and so I try to find opportunities where I can get in and have a really tight stop if it doesn't go my way today. But if it goes my way, I might hold it for months. So I'll do anything from a quick day trade to hold it for months. In some cases, years, but for the most part, for the trading, it's weeks to months is ideal, with either options or stocks or crypto.
And are you really just sticking to these like core stocks and just watching and understanding those, or are you seeing other?
No. We'll have a rotating hot list, and with MarketGauge, we're a big advocate of looking at the condition of the overall market. So just to give you a sense, like first thing I'll do in the morning is look at a screen that has the S&P 500. And actually, I won't do it now, but first I'd look at the futures because they represent 24 hours. But what's the pattern on the S&P 500? What's the pattern on the Qs? I have the RSP here, which is the equal weight, because this morning we were talking about the fact that RSP was up yesterday, even though if you looked at the SPYs and the Qs, you'd be thinking, oh my gosh, this market is in big trouble. And it is, if you look at the mags down here in the lower right, that's what you brought up right at the beginning.
Yeah.
But if you look at the equal weighted index, it's not. So then what we did is we went and looked at all the sectors. And so looking at the sectors, XLF is pretty good, the financials. XLU, I love XLU. That's the utilities, which is really, the energy powering the internet now.
Right. Yeah.
So we'll look at it holistically. And then I generally like to have between 5 and 20 names that I'm looking at. And if I could find a balance between different industry groups, I would. Like today, my balance is ETH, which is Ethereum, right?
Yeah.
RMD, which is a medical device maker, and EVLV is an AI kind of weapons security stock. Walmart, because
might be. Is this kind of like a recession-y type stock, or?
Yes, totally. So TJX discounter. Now, I'm not much of a shopper, but you don't have to be much of a shopper to know what TJX is all about. That really, it exploded. It's in a great trend with earnings. And then you got Target, which is a disaster, right? This thing can't get out of its own way. Now it's below its. And so that made me say, you know what? We always go through this period in economic cycles where the market decides the consumer is broke. They're only going to shop at the cheap places. And then we'll hear even the rich people shop at Walmart and Costco now. So this thing can't go down, right? And so then you'll start to get Walmart on a real run. And this whole pattern looks like a pretty explosive pattern, and it just came down to the high here, right? So so that's why I'm looking at Walmart, and then Uber and AEP is the energy play.
Yeah, so because stocks like tech stocks, obviously Bitcoin, those ones have had such a great run. I mean, they always run pretty well, but they've had a really epic run this past year. What are you foreseeing now as the switch going into, the next 6 months? Like obviously you're looking at what sectors are really trending and focusing on that, but do you see that trend now changing? Like as you're talking about Walmart and things like that, are you looking at like a totally different sector now to focus on over the next like 6 months to a year?
Not for that long. So I'm as bullish as the next guy that AI. And so the summary of how I see the market right now, bigger picture, is that .com in the 90s, we had one thing. It was like put a .com at the end of your name and you were 10x. Right. And now we have like 5 equivalents of .com. We've got AI, we've got quantum computing, got the power that's going to generate all that. We've got cryptocurrencies. And all of these things are working together. Now, they all got a little bubbly in the last couple months. So again, if we break down below the July lows, then this pullback that we're seeing in these stocks is too much for right now. And it would be just like, here's the January low. So here, the red line here is the January low for the SPYs. So in the beginning of the year, we were saying, Mish and I are saying, if you break below that January low, this year is in trouble. But all you have to do is wait for it to come back up through the January low, and then you can start getting optimistic again. Same thing here. Like, I don't know what's going to happen in September, but September's historically a rough month. I hope we go down to the July low so that October and November, which are typically really good months, then I would be back into all these hot stocks if they turn hot. So no, I don't really like being in Walmart or AEP, this is boring, but I knew you were going to ask me what I thought looked good. So this is what looks good.
Yeah, Walmart's
And
great. Yeah,
Jackson Hole is Friday, right? So
yeah, that's
after, I don't think this market really knows what it's going to do on Friday. And come next week, Jackson Hole will be behind us, and then the fall can, whatever's going to happen in the fall can get started.
yeah. So yeah, you're not predicting anything necessarily with those, Fed minutes and Jackson Hole.
I think that, well, if I'm forced to guess, and it is a wild guess, I think that the scenario is just set up for whatever Powell says. The market's going to be disappointed. Like it's just there's just too much hype on it. I don't see how he could do anything but disappoint a bunch of people. But I think it won't be. It's not going to be market changing. It just if we sell off into it, the market will probably rally. If we rally into it, the market will probably sell off. And then next week, everybody will, come back and say, okay, it wasn't that bad. Let's focus on what's real here. So I don't think in the end it's going to be life changing, but I do think it's kind of holding them. I think that big tech stocks are selling off because they would have sold off on Powell's speech, regardless of what he said. So everybody's doing it early.
Right. Right. But ultimately, they're all doing pretty well. No, but then
they're doing great.
Yeah.
I mean, here's the Mag 7. It's doing from 40 to 60, and that's all of them. And Microsoft, I mean, seriously, it's at 500, but it was at 360 at the lows. It started the year at 420. This is a huge company. It's sitting at its 50-day moving average.
Yeah.
I mean, the expression that I think is kind of funny is that stocks are the one thing that nobody wants to buy when they go on sale.
Yeah, exactly. We all want to buy them at the highest price.
Yeah, they all look the greatest when they're the most expensive. So everything pulling back to the 50, for me, it's a simple recipe. If you're above the 50, if you're above the July low, do you like what the company's doing? And then what we teach is, how do you figure out how to control your risk so that you can buy these things? And if you're wrong, you won't lose too much. And if you're right, you know how to manage your trade, and you can let it run for as long as you want.
Yeah.
So that's the game.
Absolutely.
I like whoever's playing nice. I'm not married to anything. It's just a stock.
Absolutely. Yeah. It's so hard not to be emotional. The stock market's such an emotional thing, and it's so hard to manage your emotions and obviously not buy a stock when it's at the highest or be too scared when it goes down, and start to realize those as like signals to get in or stay cautious. And
I like to look at it as a game. And, once you try and take the money out of the equation and make it a game, and it should be fun. It should be fun.
Yeah. I feel like the game is with yourself, really.
Yeah.
Learning it and mastering your own strategy and your own emotions when you're doing it.
For sure.
But yeah, so with your MarketGauge, you basically offer like one-on-one coaching. Can you explain a little bit more about your program and your site? And
yeah, sure. So we, as I started to say earlier, we have several different things that we do. I teach every morning live in the markets with one of our services, and we learn how to do the kind of stuff that we're talking about here. I described some of the stuff that we did this morning in the stocks we went over. We also have courses, but right now we're kind of encouraging people that if you want to learn from MarketGauge, just show up live, and we'll just show you how to do it. You'll get access to everything that we would normally be selling in a course or an indicator. But we also have automated models, which have no discretion. So they're completely algorithmic, and they just give you the buy and sell signals. And these are models that are actually used by professionals to manage clients' money. They're also used by a different sister company of ours to manage money. So we're very rules-based, right? That's why when I laid out the lines, it's really rules-based. When I trade, you'll see the magenta line on my chart is just a 10-day moving average. Like
Yeah.
Everybody's got their favorite moving average. I don't care what yours is. If you have a simple entry and exit system around important points, then it can work. And so we teach stuff like that, and money management and emotions. So yeah, and we put out a lot of free content too. If you go to marketgauge.com, and marketgauge.com/outlook is a column that I write, and my partner Keith puts out a video every day, and Mish puts out a newsletter every day. So that's what we're about.
Awesome. I love it. Lots of information. Well, I don't want to take up more of your time. I really appreciate you meeting with me today, my morning, your afternoon. But yeah, I really hope that I'll be able to catch up with you again soon. I personally learned a lot from this call, and yeah, I'll definitely be kind of looking at the market a little bit different now. And I'm looking at especially the S&P 500 and these ones. I mean, those are the ones I feel like everyone mostly focuses on or thinks about. And yeah, everyone kind of has a different strategy about how they approach it. And it's really kind of figuring out what works best for you.
Absolutely. And so if you're going to look at the S&P 500 and look at that January high, the 10-day high, and that 10-day, right now, I think the low of January, the month, is the same as our January low. So that's really easy. All people have to remember is we get below that level. Some guy on the internet told me this was bad. And keep an eye on RSP, right? Because that's the equal weight, and it doesn't usually do so much differently than the mags getting sold off. And that pretty much means that if this doesn't sell off, the mags are probably coming back eventually, and the rest of the market could be getting healthier. So to the emotional side, stay calm, have fun.
Yeah, don't lose too much money.
Don't lose too much money, right?
Well, thank you so much. I really appreciate it, and I hope that we can do this again soon. And update. I want to know what your thoughts are on this on the market in the next couple coming weeks, and after into the September would be interesting too. I can't believe the summer is going to be over in 10 days.
Yeah. Well, it'll be snowing up there pretty soon, right?
Yeah. I feel like I live in the one city that doesn't snow too much. But
well, yes, but if you're a skier, you live right down the road from some of the best ski mountains in the continent.
You have to spend your winters skiing or snowboarding, otherwise, yeah, it can get kind of depressing. But those short, dark days. Anyways, it was so nice to meet you, and I really appreciate your time today. And yeah, I hope to speak with you soon.
That would be great. I enjoyed it. Have a great day.
You too. Bye.
Bye.